So in my first video, I took 4 trades plus 1 already running. Second video, 2 hit stop loss. Today, another one just stopped out. But yes, was interesting. I still have 2 trades from the very beginning that are surviving, and today I'm analyzing all USD pairs again to see if I should add more or just let the survivors do their thing. So the last time we met, we had 2 trades already at stop loss, which is the British pound US dollar and the Australian dollar US dollar. Well, another trade got cut off yesterday. I personally cut it off. It was the US dollar Canadian dollar. Let's take a good look at that. So this was the trade, and I stopped out right here, as you can see at the spot. Very interestingly, I was on the bus when I saw this, and then I was like, oop, finally my safety line got cuffed. Let's step out of this. It's consolidating somewhat. So you all know I had a proper safety line, which is the weekly line up here. However, I decided to come up with a tighter stop so as to keep the trade running, and that trade went out. Also, I have been haunted by Australian dollar US dollar. The very first one I left with the huge loss of $600 loss. And when I look at that chart right now, I feel pained. Let me show you what I mean. If you go back to the Australian dollar US dollar, I entered that trade right around here. And if I had kept that trade, was it here? Yeah, no, it was down here. Entered that trade around here. And if I had kept that trade, I would still be, in fact, matter of fact, I would be in crazy profits right now. Instead, I lost $600. I would have made twice the amount of money I had risked. Okay, not twice, 1.5 the amount of money I had risked. Because my trend line originally was down here. And when I entered the trade here, as you can see, price broke through this trend line. Hence, I stepped out. That is painful. Very painful seeing this trade run so far, and to make it worse, I can't even come back into this trade. Why? Because I do not have a clear-cut action line for it. This is the place where I now have a clear-cut action line for us, and it has to be a 1-hour view. It means what I have to do now is sit down here and wait for this to be functional. Until price breaks above or below, I can't take any trade anymore. And if price breaks above, it means my new entry is going to be down here and stop loss is going to be up here. But there's a big problem, right? The big problem is this. I have history, which is, you can see all the way from Wednesday last week till today. Yes, it is history. The problem is I only have 2 specific touch points, which is Wednesday last week and yesterday. Those are the only 2 specific touch points I have. Not so good for me as an action line. It could serve as a safety line, but not an action line. But regardless, if price breaks above it, I'm still going to take a buy trade. And if price breaks below it, I'm going to take a sell stance. Now, heading back to the information that really matters. What is happening with the last 2 trades? And that will be the last thing we will discuss in this video. If you really want to see the other trades and how it led to this situation, I'll be pinning the videos up there. You can just watch the link up here at the top right of your screen. You would go with the link and watch the previous videos and see how it got down here. Let's continue. First, I'm going to analyze the charts. When we're done analyzing the charts, then I'll show you guys the meat of the video, which is basically the current situation of the last 2 trades. Let's head into it. The first is the Euro Australian dollar. Okay, basically we've just analyzed the Australian dollar against the US dollar, and we have a possible opportunity coming soon. The next thing we have is the Euro against the Australian dollar and the Euro against the US dollar. And right off the bat, I have a trade. As you can see right here, I have adjusted all my trend lines to fit the situation, and what I have here is price has broken above, moved a little bit above for me, and I can dive into this trade using this area as a safety line. Yep, it's going to be my 1 hour safety line. You might be wondering how I get to just blindly take these trades fearlessly. Well, it's not fearlessly. I'm taking the trade because my strategy says take it. If I lose, I lose. If I win, I win. It is that simple. But what I know is I usually catch wins that totally nullifies the losses when I catch a good win. When you catch a good win is what really matters. Risking the usual 1% of the account balance, 1% as usual. Aiming for entries right now, making sure the stop loss is exactly where it is meant to be. I don't really care about the take profit. Stop loss is my business. And there we have it, a brand new trade. Without further ado, we instantly do this. Take a screenshot, dive straight into the journal, and open up an instantly new situation for it. Boom. I don't like to waste time. I like to do it on the spot. The time is currently 8 o'clock on the dot. I think I entered 7:59, but 8 o'clock, 7:59, no difference. It was a long trade. It is the euro against the US dollar. I'm looking to improve on this analysis by adding more fields, but for now, I'm looking for 50 trades, and this is trade 36 minus 2, so that's trade 34. Basically, I'm waiting when I get 50 trades. We're going to do a proper in-depth analysis and see the ones that fail, why did they fail and what do they have in common? The ones that won, why did they win and what do they have in common? And then we'll move on to the next set of 50 trades where we use that lessons to become better at making decisions. So you're having the strategy and we're refining the strategy to become better after every 50 trades. Why do I have 50 trades waiting? Well, I'm a swing trader, and also I just want to have a lot of data before I make a decision. You could use 10 trades to do this. You could use 25 trades. You could use 30 trades. Personally, I just chose the number 50. Heading on to the next place is the British pound US dollar, and you can see the exact same scenario for this. We have a clear reason to come into this market. The reason why I like to use the long position is because I love to use it to just instantly determine my stop loss quickly. To me, that is like the fastest way to get yourself a stop loss. Now I have a stop loss, a useless take profit, not really a useful one in my opinion. However, I am going to extend this guy somewhere at random, and I'll just take this up somewhere good. I think this place is fine. Let's just leave it here. It's fine like this. Second trade, the British pound US dollar. We don't know if we're going to win. We don't know if we're going to lose. But trading trend line is slowly becoming a secondary nature to me. I just see the opportunity and I take it. I just like to take it in that manner, so I don't have to overthink or anything. This is the second trade. Take a screenshot as usual. Copy straight to the journal. I don't have to wait for anybody. I don't wait. I don't think about it. I dive straight into my journaling because it is absolutely important, right? It is important you journal this stuff and you use it to calculate how good you're becoming at this stuff you do every day. If you're becoming better, if you're becoming worse, if it's something that is worth keeping up with. Oh, I forgot to add the time frame in the previous one. So let's just add the time frame right here. It's a 1 hour time frame. Moving on to the next price chart, we have this situation. Now, this is good. This is a trade that I had gotten into, got stopped out. Hence, I get to reanalyze the chart, and I haven't even looked into this chart again for a long time. You can see everything is still old here. So what I'm going to do is I'm going to delete everything that has to do with any line that has been crossed. You can see all this line has been crossed. So my last lines here are labeled to weeklies, so I'm going to go down to the daily, and then from the daily I'm going to start the entire process again. Now on the daily, I do not have enough daily candles to make a reasonable decision here, or else it will be too steep. As you can see, That is way too steep in my opinion. I can't call this a daily time frame, but I can call it a 4 hours situation. As you can see, put it down here and this down here. Now you can see that it's cutting across this price line, so I'm going to have to set this all the way up here. Seeing that price is currently mitigating it, it is fine. It is still a 4 hours time frame view. So looking at this in the 1 hour, we have this one up here. This may be my safety line, maybe, I don't know. So let's take it back to being normal lines as bearish lines. We head to the weekly and we get ourselves a new trend line to focus on the situation. Just right here we have 1 hour situation where we are safe. Now what I am personally looking out for is on the 1 hour, if price breaks below this point and closes well below, I could take a sell trade. If price breaks above, I could take a buy trade. But until then, there is no trade here to just dive into immediately. Moving on to the next phase. Oh, we still need to rearrange this. This is on the 4 hours. All right, let's go back to the daily. On the daily, we do not have enough situation to print an uptrend. On the 4 hours, we do have something good, which is right here. Anyhow I draw the 4 hours, I think we have missed the 4 hours trend. As you can see right now, we've missed it because price has broken, gone back, broken, gone back. So I can't use this as a good trend line. But there's something about this particular currency pair, the US dollar against the Swiss franc, you need to pay attention to. This is evident in the weekly. Now when you go to the weekly and you pull down this chart, it is evident in the monthly. You go to the monthly and you pull down this chart and you just squeeze it a little bit, squeeze it, like literally squeeze it till you see the dinosaur right here. What you will notice is this has 80% been bearish, and then when you start to step down time frames, what you observe is it is still heavily bearish. Meaning every time you just taking a bird's eye view, every time you draw an uptrend line from here mentally or physically, you will notice the uptrend line gets broken, and that tends to hold more water than when you draw a downtrend line and the downtrend line gets broken. For example, if let's assume this was where price stopped and you drew a downtrend line like this, the downtrend line got broken, yes, but it didn't stand because the market is generally a downtrend market. Taking that into perspective, it means you are only drawing an uptrend line to figure out where to join the downtrend from in this market. Hence, in my opinion, drawing this 4 hours right here like this, yes, it is risky, however it is the only thing you can do. It's the only thing you can do, and it holds way more water you doing this and then entering the trade than you drawing an uptrend and hoping that price breaks the downtrend. I hope you understand what I'm trying to say, but let me explain it in the simplest manner I can. This market primarily is a downtrending market, as you can see. What it means is if you are buying every uptrend here, you will end up more loss than wins, and if you are selling every downtrend here, you are winning than you lose, right? With that scenario, even if you draw trend lines to the upside from random locations, not all the time, but from random locations, you have way more chances of winning when your uptrend line is broken than winning when your downtrend line is broken. Meaning you have way more chances winning with short trades, that is shorting the market or sell trades, than winning with buy trades. It doesn't mean you will not win with buy trade. It means winning with buy trade, you will win for a very short period of time, unless this market fully starts to turn to a complete uptrend for a long term. Now this is for a swing trader, not for a day trader. For day trader, on the 5 minutes, I'm telling you, this little uptrend you see here, this move from here to here, is a lot of money. Not for us swing traders, it is terrible for us. So looking at it from the perspective of a swing trader, let's continue the analysis. On the 1 hour, I have price make this beautiful new downtrend, which is my tighter trend line for a downtrend on the 1 hour. Now I can dive into this market with this situation. I know I've gone quite far, it is a lot, but I'm still risking the same amount I risk, 1%. So no matter how far or how long it is or how long it's going to take me to hit profit, I'd rather risk the same disciplined 1% every single time. Let's create that limit order, take it to a market order, 1% of the account balance. Make sure your stop loss price is useful. I don't care about the take profit, like I always say. Stop loss is what I care about, and we hit that sell button. As usual, screenshot, copy, dive into the journal, and add the US dollar against the Swiss franc. That's all it is. Put it in the template, entry reason right there. Actually, it's supposed to be entry picture, not entry reason. For these trades, there's no reason apart from price broke a line. That's the only reason. It's always going to be the only reason. Price broke a line. 8 a.m. I'm shorting this market on the 1 hour time frame. I have a good space of 1% of my account balance. And moving on to the next one. Now we are close to the market where it goes crazy. This is the British pound and the euro. These two pairs tend to constantly jibber jabber around each other. They tend to dance a lot around each other. You kind of find it difficult to find this pair moving in one direction anyhow at random. If you catch it, you might want to hold it down for a long time. So let's see what's really happening here. On the weekly, on the daily, I have this uptrend. This is not really okay. Yeah, this is the daily one. Uptrend. On the 4 hours, what do we have on the 4 hours? Now, this is one beautiful thing I have noticed, that I think someone who doesn't trade trendline before would likely fall for it. I don't know why I'm not falling for it yet, but maybe I'm just lucky to have gotten that information somewhere. I won't tell you where I got it from, but this is what it is. So let's assume you can see that, actually let's not assume, we had the trend line right here. Someone would have seen this candle and sold, but that's wrong. Why? If you notice, price closed here and opened down here. That is not a selling reason at all. You need a bearish candle closing, not a bullish candle closing below. So in this opinion, I will have to switch this guy down here and stick with the 1 hour. And this time we're going to be waiting for this to cross above, and we would likely get to trade a buy situation for this. But I'm quite scared of this buy situation. Why? Because this is a weekly standpoint. Well, it's a weekly standpoint. That means this trade is most likely going to sit for a long time before we're setting off what we're doing. However, that's all for the new analysis, and we had about how many more trades? We had the Euro US dollar trade, the British pound US dollar trade, the Euro US dollar Swiss franc trade, all coming in. And they are all saying, well, we are all standing against the US dollar. Take notes, I'm shorting the US dollar in all 3 trades. So if the US dollar tends to do something miraculous, I am literally going to be losing 3K. However, let's head back to the history. The last 2 survivors, the glorious ones. So let's go. The US dollar, Japanese yen. This is literally crazy. This trade has come to my trend line once, twice, and is running. This trade has literally made up all the losses I have made in the last 3 losses I have made. Let's do the market analysis. Let's do some calculations here. These are the 3 losses I made. Get myself a calculator, boy. Let's take a look at the market. This is the maths around the whole situation. The first trade, I lost $600.23. The next one, I lost $104.77. And the last one, I lost $120.44. A total of, what's happening here? Oh, it didn't add up the first one. So $604.23. So I have lost a total of $829.44. That is not even 1% of a trade of the account. But currently I have this brother here. This brother here is, let's take it out. I have 1,400. Let's just say 1,400. It means I am literally $570 in profit if I close this trade as it is right now. However, I'm greedy. No, I'm not greedy. I'm just learning. So, however, I'm still watching this trade. Why? The game is to catch the trend for as long as the trend can go. That is the game. So whenever price dances, jubilates, and walks back to this trend line and finally closes above this trend line, then I will close this trade. However, for now, this trade is being monitored on the 1 hour. It was supposed to be monitored on the 4 hours, but you can see on the 4 hours, I do not have enough details to call this a 4-hour trend line. That's why I'm looking at it on 1 hour. So right now, I'm going to have to adjust this trend line to the last week, which is this. So once the price closes above this, I'm still running in profit. And for the last brother here, we have the New Zealand dollar, US dollar. This is supposed to be a daily trade. And I cannot even print a 4 hours watch on it. Because if I print a 4 hours watch on it, I ought to have closed this trade already. Let me show you what I mean. If I put a trend line from here to here, I ought to have left this trade here, which was close to break even. Now the trade is going the opposite direction of the trend line. Again, if I decide to say, let's redo this whole analysis, I still can't do anything yet. Why? Because my weekly structure, this is supposed to be daily. Okay, this is weekly, yeah. So this weekly structure, rather this weekly uptrend line, is supposed to be here, which is, let me just put a fake line for us to see. It's supposed to be here. And if this is here, it means if I come down to the where is it? This is a daily. Come back here. So if I come back here, it means I'm supposed to be buying this market, putting my stop loss below this line right now. And that is on the 4 hours. On the 1 hour, I'm supposed to be doing the same situation, just like the first, right here. So at this point, I'm looking at this trade. It is a daily trade again. Remember, it was supposed to be a daily watch trade, and this trade is, to me, a total experiment of the daily time frame. I'm not going to close a trade even though it has gone beyond like reasonable reasons to close it on the 4 hours and on the 1 hour. However, what I'm doing here is I'm trying to see on the daily, respecting that daily entry and following specifically that daily situation. Is this trade going to work? That is it. I'm not going to touch it. This trade is literally going to last weeks if it doesn't cut me out with this particular trend line. If it doesn't, it's going to take a long time. If it does, it should cut me out as soon as it likes. However, this is a trade of a test of something, and it's going to stay there for a long time. So this is it. We have all of this running. If you look down here, geez, this is so much green light. This is so much green light. But this is all we have running, and we're looking at all of them today, hoping for good profits if it works, and hoping for not terrible losses if it doesn't. Until then, I would like to tell you guys thank you. See you guys later in the evening when we see more situations, see how it's going and where it is finally heading to. This market value is absolutely outstanding. And yes, it is a paper trading account. I am not ashamed to say that. So peace, catch you all in the evening.